Hey traders, Jeff coming to you on February 4th, 2025. I want to show you a trade that we did today. I thought it had a lot of really good education behind it that we delivered to our members at Full Throttle Traders. We ended up getting, actually ended up going 4R. I'll kind of break it down. 4R means if you have a $500 risk, you have 4R, you actually end up making about $2,000 on the trade. Some people may have a 500 risk, some people may have a $10 risk. You kind of get where I'm going with this. So the number one thing that you're looking for when this type of trade actually starts is you want to see that the major time frames are in check, are in sync. And if you noticed here, StarBucks had a big move here the other day, and that's usually the type where you don't want to get in. You want to see if it holds. Maybe there's a 3-bar play, as I mentioned the other day on Costco could go, but outside of that, we were waiting for a pullback. Today, when we saw this, it was coming up here about 109, actually 108 and change. We're sitting right here. So we knew we had a lot of room potentially to go inside of the move higher. And so I'm going to break this down for you, and I'll look back at a couple different time frames. But what specifically came to mind was the 2-minute chart. So with our members live, we were actually looking for plays, and we looked at the gap list. We couldn't find anything. Market looked kind of trashy this morning. Stocks were being jostled back and forth here. But when I saw this specific one trading here, this is what how it kind of all came to be. So if you look back in here, I saw StarBucks was holding well. We look at the 2-minute chart, I look at the 5-minute chart, right? I saw that daily time frame up in here. I just mentioned to you here that this had good characteristics, but it's just as important to look at the 65-minute chart. The 65-minute chart was trailing the 9 or the 8 EMA, so it had room to the top. Clean trading on the smaller time frames. It was just a matter of getting us to this entry down here. So I told the members that we normally want a little cleaner of a pullback here, but what I actually did was watch this pullback to here. Now, the cool part about this was we took this down here at 108.60, as I mentioned here, and we gave a stop down here to 108. So it's a 60-cent stop. So we have a good risk to reward in that video, in this trade here. But it came down only 3 cents. We literally only had a 3-cent drawdown in the stock here. So again, we were trading 500 risk in this particular trade here. And once it came back up here, I won't go through all the details. I'll show you the ad sheet in a second here. We began the model of adding to our positions. One of the reasons I like to do that is because if we're wrong about the play, and it happens, we're not carrying the full stock of what we're loaded up in the stock down to a stop. The key is, that is one of the keys, not being able to have to take that down to the bottom, just being able to only take half that risk initially and add to the winning position, add to the winning side. Let me take a second and I'll kind of just show you that if I can. I don't have it on this screen here, but there is actually a chart that I use. And one of these days I'll bring it up for you and actually show you what that looks like inside of our, actually I think I have it right in here. So I'll bring this over. So you can see right in here on StarBucks, we got it at 108.60. We had to stop at 108. We added at 108.90. And now this formula right here is something that I've worked on for years to get exactly what I think the distance might go, where to add, how to go break even, and also not allow us to be too far out of the money before we actually take these plays. So you can see these areas that we took 108, we not added, we used our stop up here with the break even here, took a quarter off, and then 4R on the back here is ultimately what it would have been. But here's the challenge. When I look at this on a trail on a 5-minute chart, this management system is gold. I'll give you an idea. The only time that we got stopped on this, based on it's not touching the 9 EMA and the 5, just have a certain strategy on this. By 3 cents, we got trailed at 1.2R. That's the only time that strategy actually violated how I use the 9 EMA on the 5-minute chart. Otherwise, it was a 4R trade up in here. This nailed us out for about a $600 win, 1.2R, and this would have been a $2,000 win, probably closer to $1,500 because we're taking a little bit on the way. The key part on this is, number one, making sure the daily chart was in check, making sure the 65 looked good, and also realizing that this piece on the 2-minute chart, even though the target showed higher than this, as I tell the room members, I say anytime that we're coming back towards the top of what would maybe been to the left where I had some resistance, we always want to take a piece. So we actually ended up taking some just a little bit early into that run, into that move up in here. Actually, then we had the pullback, and then that's what got us, then it moved higher. So even though the original target was here, we took it here because that's what the left was showing, right? So we do use a mechanical base, but when the chart shows up something different, we always fall in line to the chart. That is the key, right? Never be so mechanical where you just have it. You have to ebb and flow with the chart. And if something is close and you see resistance to the left, in this case, take a piece there. Don't try to wait because the chart does not know the mechanical you're writing, right? But the mechanical knows that the chart's there, right? So you don't want to follow that. Follow the chart first. This was a beautiful trade. Once again, if you just where we got out at the 1.2R was a $600 win, but it was 3 cents away from being a $1,500 win. The key is that we got in this trade. If you look at the time that we entered the trade right here at VWAP on the pullback, right? We entered that trade precisely at 1026. So if you're trading pullbacks in the market, waiting on clean patterns, we're not trading 2-minute breakouts. We may trade some of those, but we're trading those down in a way to where we're getting some quick hits and then we're taking profits off the table. We're not staying in those trades for any length of time, right? So but when we get into a real trade, we expect that trade to go far and to where our target is. Sometimes these end up becoming full day trades. But when you can have a 3 cent drawdown and your stock runs from 108.60 to 111, right? That's $2.40 with only 3 cents backwards. You're onto something. And we do this every single day, day in and day out with our members. We scan the markets with our gaps. We wait for the stocks to come into our field. We don't chase stocks. And if they aren't coming to us, we're either going to find different stocks or we're just not going to trade that day, right? This came to us. It was a little bit more of a sloppy area than I'd like, but again, it had strong characteristics on the larger time frame. So I told the room that we're going to enter this based on how the daily and that 65-minute chart looks. And we're going to put the stop under the low of the day and a few pennies. We didn't even need to be that far, but we gave it 60 cents and stopped there. So we got it here. We took, in this case, 60-cent risk would have put you about 300 shares. You would have added 300 at 90, and we just sit there and trailed this thing all the way up. Other than that 3 cent drawdown, with the 42, I usually give it a nickel. Went to 34, 37. My 34 is 3 cents drawdown. That 3 cent cost us probably about $900. But that's okay. The key is that do you have a management system that you can follow, that you can work with, that you can watch? We do this. Again, this is you. People ask me all the time, how did you come up with that? I don't know. Over the years, I developed this and I found these strategies here. And really what it comes down to for me is that 5-minute 9 EMA on the 5-minute chart, not trailing it back to touch it. It has to touch it, and I have to look for bars that actually close above that a few bars before I move the stop. So sometimes in here, we will get a little bit further away from the 9 EMA. So right in here, I say, hey, the 9 EMA is getting extended from price. And because the mechanical says take it up here, I said, we're not going to follow mechanical on this exit because we're getting too extended from the 9. Usually it looks to fill that little void. That's what it did. It came back down, filled it, and it went on. And so we actually ended up taking a piece right up in here rather than down here. We just took the back down in here. So anyway, I hope that helps. Come check us out in the Full Throttle Traders. Learn the mechanical, learn how to find charts, learn that larger time frames, and learn how to trail using this unique strategy. I don't know if anybody's ever used it quite the way that I use it here, but I would never change it. This is money. This pays us almost every single day. We don't even have to have a lot of frequency. We just find that one and we scan for that first hour. We might take a breakdown, a little scalp here, scalp there on half lots, but we wait for the pitch. When that pitch comes down the center, we're sitting there at home plate. ready just to knock that thing out of the park. This happened the same with Google the other day. I did a video on that. I did Costco the other day on a 3-bar play and a swing trade, and I have a few other plays that we had today, and I'll probably bring those onto YouTube here in the next few days, because we got a nice start to our IBM play today. We had full profit on SBUX twice today. We're in full profit on the DPST on the puts that we sold at 110. We're full profit on AXP coming into our Friday expiration. It's closed in on break even there, but almost full profit on DPST. Just took profits on INTC. I could go on and on. We probably have 8 or 10 here today and yesterday that we're closing the wheel on. I don't think we had a loser in those few days. We have them, don't get me wrong, but the way that we track and manage and follow here, we do quite well. Come check us out, Full Throttle Traders. Love to see you, and hopefully this was helpful. Take care.